Hi everybody, this is the investing teacher, high school science teacher, teaching others how to invest. This video I want to go over some of the slight changes I'm going to do for 2022 involving stocks and options. I'm going to go a little bit more in the buy and hold side, a little bit more in the conservative strikes for the options, and I'm also going to look at my daughter. She wants to do stuff with 2022 as well. Father, the best element, and let's get right to it. Hi, everybody. Here I have my daughter Avery, and she's going to tell you a few of the companies and stocks that might be good for 2022. So, Avery, what companies do you think will be good for next year?
M1.
Well, M1's the brokerage that we hold our stocks, but what companies in M1 do you think would be good? You want to
Maybe
Go ahead.
Apple.
Apple could be good. What else?
Maybe Roblox because it's pretty new and it's doing pretty good.
Roblox doing pretty good. Any of these?
Mm, Probably Pepsi.
Pepsi, they pay dividends. They pay money back, right? And maybe one more you could think of?
Johnson Johnson.
Oh yes, Johnson Johnson always going to be around, right? Anything else you want to say to the camera?
Mm,
Okay, bye. All right, everybody. So here are some of the 2022 goals. Again, the investing teacher. If you're interested in any of these goals and how follow along that journey, I do have a website for thetatraders.com. I have a free 2-week trial. If you might be interested, feel free to leave a comment down below or send me a message. Okay. So this is a post that I left in the Facebook group for Option Wheel, which I'm a moderator of that group. And I'm just going to read the post that I wrote on December 23rd. So I was reflecting on the week off. This past week, we were able to take the family to New Orleans, saw some gators. Luckily, I'm still alive and they didn't chomp me. I didn't look at my accounts all week. Ah, the beauty of not having to browse every second on your portfolios. Got me thinking of switching a few things on my percent allocations going forward. So we're going to be lower, and I'm going to do more slides on each statement here. We're going to be lowering the amount wheeling. I'm going to go from 40% of my overall portfolio down to 25%. The extra 15% difference is going to go into buy and hold with stocks and ETFs I plan on holding for years and years. But I am going to try to get some income off it, and I'll be selling around 0.1 delta covered calls a few months out in expiration. So if they happen to go past the strike price, I'm just going to let them expire because that's going to lock in a really good gain. And you would also make some of that current income. Stuff like buying ETF IWM, currently at 220, selling a covered call for March 18th at 250, and you would get 20 bucks in premium. 20 bucks don't care too much about, but I would like that gain quite a bit from 220 to 250. That's about a 15% return in a few months. I do still plan on doing a few poor man covered calls and spreads, but really far out of the money low deltas. So let's go into more detail on each statement here. Here's going to be my total portfolio allocation. Again, I'm not going to be super picky if it's 1 or 2% off here, but relatively close numbers. 40% will be buy and hold ETFs. SLYV and AVDV are small cap value ETFs. The SLYV is US, AVDV is international, and we're not going to touch those for 20 plus years. Long-term small cap value, I believe, could possibly give slightly better than S&P 500 returns in the very long term. Then we're going to do 20% buy and hold with high conviction trades and positions that I want to hold for a while with the 0.1 delta cover calls a few months out. Also going to continue to be wheeling a little bit lower IV 0.3 delta possible positions, and also cash secured put memes go way out of the money by the close them at 50% profit. Still a good strategy, I think, as long as you're not putting a huge amount of your portfolio into these. If you have a small percent and diversify it out to 8 to 10 positions, even if 1 or 2 don't go your way, you could always wheel, cover, call it back. And then 15% will be in credit spreads, usually 0.08 or so delta, and iron condors, where you sell the put and call credit spread a few months out. So why am I doing SLYV, AVDV? This is the per decade returns of different asset classes from 1930 all the way to 2019. As you can see, there is quite a bit of shuffling around from decade to decade. However, when you look at the last column, if you take all of the years 1930 to 2019, the small cap value in blue was by far the largest of all the asset classes. So we're going to be leaning more towards the small cap value, a little bit higher percent than the other asset classes, but we still will do some small cap blend, large cap value, S&P 500 to diversify it out because each decade might be different and not really sure exactly what the future will hold. But I think having a small cap value slight tilt towards it could be beneficial for very long term. Now, about 20% will be buy and hold 0.1 delta covered calls. And I'm going to go a few months out in expiration, not trying to get weeklies or even 1 month here. I want to do high conviction picks, stocks that I believe in the long term, that I'm happy to own for many years anyway. The goal is to earn a small additional income. I'm putting quote unquote safely, because if it's a 0.1 delta, there's still a 10% chance that it might go past that strike price, which I think is relatively safe. And you might prevent getting the 100% of the gains in some of these positions, but getting that small additional income does give a little bit of a boost. You could buy more positions from it. And then you can earn close to the dividend payout. Here's some examples I saw on some possibilities of what we're going to be doing. So some examples, if we have Apple currently at 176.28, you could sell a March 18th covered call all the way up to 215. So you get a big capital gain if it does hit 215, and it does pay 115 bucks in premium. 115 divided by the 176, $17,600 you would need for 100 shares of stocks ends up being pretty small return, 0.65%, but better than zero. And again, the chance of it getting to 215 are fairly unlikely here. The annual dividend in Apple is 0.51%. So this is a pretty safe way to boost what the dividend payout is, and you do lock in a large percent of the gains that might happen. S&P 500 SPY is at 222. You could sell the same 318 at 250. Pretty decent gain there. Pays $106 premium, which is 0.5% return. Annual dividends 1.2. So again, this one will pay a little bit more than the dividend if you're able to do this every few months at a small delta. Last but not least, of course, these are just possible examples. I don't know if I'm necessarily going to do these or not, but check the channel to see if I might. VYM's at 110. You could sell a 218 covered call at 117, and it pays $25 in premium. 25 over the 110 is a 0.23% return. The annual dividend is 2.8%, so this will give a slight boost to the dividend payout. I'm going to continue to wheel with lower IV, 0.3 deltas, also cash curve put memes pretty far out of the money here, and buy to close them at 50% profit. Not necessarily trying to wheel these memes, but getting a good current income and then just get out at a good return. I'm going to lower this allocation about 10% from the 40 or so percent it was before. Still feel there are good opportunities with wheeling. Going to do more technical analysis with support and resistance to see strike prices that are not as likely to get hit. An example of that might be with SoFi. It's at 1509. Cascade put out to February 4th at 13.5, and you make $75 in premium. Delta's close to the 0.3, about 0.28 for slightly lower IV position. And if you get a sign, I'm going to wheel it back at that covered call 13.5 strike. Try to earn anywhere between 2 to 4% a month on these with a pretty high likelihood of success. Here's SoFi. This is what I mentioned with support and resistance. This is the last few months all the way to September. And you can see the stock price hovering from about 15 here. High was 24.65. The low was 13.66. Had a little bit of a uptrend now at 15.09. And this black line is the 13.5 strike price. And it hasn't come close, but hasn't actually touched this strike since its inception. So it could be a pretty reasonable play to make. The last 15% I'm going to do credit spreads. usually about 0.08 up to maybe zero point 0.1 delta iron condors and a few months out in expiration. A little bit different than how a lot of people play these. Some people do 30 to 45 DTE, but I'm starting to like and prefer more of the 3, possibly 4 months out for expirations. So I'm having great success with it. SPY, IWM, Qs, TNA, about 88% success rate so far in credit spreads since July on these 4 ETFs. So it does have a pretty good positive return in the end. And that includes buying a close it at 3x stop. It is less stressful. You can do very wide strike prices. Market's been quite up and down in the last few months, but these iron condors just stay floating and out with a big bird here. So SPY is at 470. If you iron condor SPY for February 18th, I made this position a few weeks earlier, but still looking at almost 2 months out. You go from 390 to 380 put credit spread, 510 to 520 call credit spread, pretty big buffers from current SPY values. And you could currently get this for $55. I'm already at $82 when I started the position a few weeks ago. So there's a good chance I'm about to close this out because I'm going to make about 3% a month in profit and don't have to wait all the way till expiration where you have a lot of gamma risk. I do stop losses at 3x premium. If you're considering this position, you could go 0.55 times it by 3 and then do a stop order at 1.65 so you won't lose the full $1,000 risk of the width of the spreads. Quickly want to go over savings rate. My wife did finish nursing school. Yay, graduation. She's actually going to start on Valentine's Day. And at that point, we're going to save about $2,500 a month. We're going to be putting it into the similar percentages that I just mentioned. We're going to try 1K to max out both Roth IRAs, 500 each. Then we'll have 1,500 left. That's going to go into Thinkorswim brokerage account. 401k, still going to match 3% in my wife's new job. Unfortunately, as a teacher, I don't get any 401k match, but oh well. Anything extra, if we could save more than 2,500, we'll go into savings, and then we will leave that for additional investing if certain stocks drop a lot. For instance, if SPY drops 15, 20%, might be a good time to buy into it at that point with the additional funds. All right, so that's a summary of our goals for next year. Hopefully, those of you that are watching have your own financial goals and saving rate and where to put your funds in and what strategies you have. If you have any questions, feel free to leave a comment down below. I read and respond to all comments. Be safe out there. Enjoy life, and I'll see you guys next time.